Okay, after that mega listing that it has had, CSB, of course, has been one stock which has been under consideration. CVR Rajendran, the MD and CEO at CSB Bank, joins us on the show right now. Mr. Rajendran, morning. Let's not talk about the valuation, although it has come down, since the listing, almost about 40%. But tell me, what has changed in the business during this same time, from when you listed up until now?
Nothing has changed actually, but we are on dot as per our projections till the month of February. So it is only the perception which has changed in the market, and on the growth, on the NPA, on the slippages, on the profitability, we are almost on dot as per the original projections till February. I don't think there is any major negative news possible during the month of March.
But tell me, so you're saying the outlook has not changed with respect to the corporate and the SME performance? Is that what you're saying? Everything is intact?
Yeah, everything is intact. In fact, we have gone into mostly the AA and AAA companies when we were not having capital. So most of them are performing well. There is no stress felt in the corporate book. Our gold loan book is growing very well, because more than 33% of our loan book is only gold loan. It is growing very well with the gold prices going up. Of course, both in tonnage as well as in value, the gold loan portfolio is increasing at a better rate when compared to the old loans. So naturally, when the loans are getting repriced, our yield on gold loans are also increasing. SME portfolio, I am not seeing any fresh pressure coming on as of now.
To lay greater emphasis on retail loan growth, how will you position yourself as a retail-focused bank going forward?
No, our retail is mainly from the gold. 33% comes only from the gold. Another 9% comes from the other retail. That book is not growing much. We have slowed down on the LAP portfolio as well as on the personal loans. Only MSME loans are growing because we have a dedicated force for it. Other than MSME, the retail growth is very, very muted during the last quarter.
And gold has been doing well given the global situation. How's that reflecting in your gold loan book growth and also in asset quality?
Now, gold loan, our NPA is less than 0.10% as compared to the industry 0.36%. And gold loan growth is almost at 24%. We were growing. During the current year, we will be growing at almost 30% for the current year. That is expectation. And the yield on gold loan has consistently improved over a period from 11% to 11.7% we have improved. And before we close the year, it may improve by another 10 basis point, maybe to 11.80 yield on the gold loan portfolio.
What are some of the major achievements since listing? How much are you aiming to grow this year?
No, this time growth was very, very muted. In fact, we were planning to grow at 10 to 12%. Probably we may end up slightly lesser than that. This is not the right time to grow. The markets are not in a good shape, and there are a lot of risk around the market. So we have to be a little cautious in the growth. We are cautious. We have enough funds, we have enough liquidity, but we are not in a hurry to grow. We will grow in the right direction when the right opportunity at the right price comes. Probably we will be in a position to grow. Today, risk is not properly priced in the SME market. That's what we feel. In the anxiety to grow, the risk is being priced at a lesser level. We don't compete in those markets. We will price the risk at the right level, and if there are opportunities to grow, we will grow. Otherwise, growth is not very important for us. We are a bottom line focused bank than the top line focused bank.
What would you like to say to assuage the concerns on asset quality? The recent reported higher provisioning as well. How would you allay some of those investor concerns?
In fact, we have an accelerated provisioning. We provide much more than what Reserve Bank wants us to provide. On a loan being identified as an NPA, we provide 25% on the same day. And where the RBI wants us to provide 40, we provide 50%. When RBI wants us to provide 50, we provide 100%. Similarly, when a loan is detected as a fraud, we provide 100% upfront. So our provisioning is much more tighter than the RBI provisioning. Normally, we don't resort to the liberties which RBI gives in the asset classification. We go by our own standards, so which are much tougher than the RBI's prescriptions. So asset quality wise, the book is very good at this point of time. Whether the coronavirus will have an impact, we have to wait and see. As of now, we have not felt the impact, but there are industries which are demanding for the raw material import, for the components import, for the consumable imports from China. If things doesn't improve within the next 2 or 3 months, these supplies may be disrupted, which may result in these companies slipping into stressed assets. But that should be across the board. Which are all the industries going to be affected, we have to wait and see. We don't have much of exposure on the pharmaceuticals. Pharma is one area where the impact will be much more. But even in other industries, there is dependency on the supply chain from China. It may have an impact on the growth of the SME as well as corporate manufacturing companies. But whether it will result in an NPA, we have to wait and see. If the situation is reversed much earlier, the better for the industry. If the situation is not improving and China supplies are not resumed within the next 2-3 months, we may have some concern for the industry as a whole.
Thanks for joining us then and sharing with us what the latest situation is looking like, Mr. Rajendran.